In this video, we teach a top trade for day traders to learn, especially when you begin. Hi, I'm Mike Bellafiore, co-founder of SVIAC Capital, and we're a proprietary trading firm located in Midtown Manhattan. And I'm also the author of the trading classic, One Good Trade, and the playbook. In this video, we teach in step-by-step detail an easy and powerful trade for day traders to learn and make when they first start trading.
This is one of my favorite setups, especially as of recently, because the market has seemed to really work with these setups. I mean, these setups have been working lately. It's something that's really cushioned my P&L this past 2 months, with stocks that have earnings, might release bad earnings, sit at the lows on day one, and have a really clean break on day two for some good follow through with some back-tested targets that make me feel confident about the trade. So let's dive right into it. Okay, so the big picture for this trade is that SVIAC had traded lower 18% on the prior day on bad earnings and consolidated the lows throughout the entire session. I have some info here about their earnings. Clearly, they had missed revenue, they had missed EPS, they had much softer guidance for 2020. They also had some downgrades from a couple of banks. So, I mean, a lot of things were going in the favor of this trade fundamentally. And technically as well, which I'll talk about next.
Anything from the earnings that particularly stands out to you?
Well, what was unique about this earnings is that they had lost a lot of domestic ad revenue, which was kind of what they were really, what maybe a lot of investors were kind of holding on to for because of that. And so what stood out about this earnings is that on past earnings, that was kind of their strong suit, and this was no longer their strong suit, and this is the only strong suit they had. So it was worse than normal for sure, and the volume shows that. Somebody clearly knew exactly what they were doing once that earnings was released. So some intraday fundamentals. The day one move was about 26% from close to close, about 7 ATRs. 5.7 times average daily volume. Really like that number. That's obviously incredibly unique to see. Opening R-vol 17, elevated for sure. ATR 1.47, which is more than good enough for a decent move. Average daily volume 9 million shares. Maybe not the best, but good enough. Institutional ownership, 82%. We like to see this. This tells us there's an opportunity here for many institutions to be hitting out. And of course, as we know, institutions can't hit out all in one day, all in one go. When institutions hit out, they have to hit out over a multi-day period. And so this is a good number for us. Short float, 4.5%. Good to know that not a lot of people are, I guess, it's not an insanely high short float where it could spike up on you or something crazy like that. On the right here, I have a picture of my RSW scanner. Anybody at SMB is welcome to ask me for this scanner. I give it out for free. I share it with everybody. This is a relative strength weakness scanner, and basically what it does at the end of each day, me and my trading partner Armand, we go through it. We figure out what stocks had the largest moves, what stocks had the most volume and the largest intraday range. And most importantly, if it's red or green, it means that it closed at the high or low, top 25% of the high or bottom 25% of the low. The reason why we care for the stock to close the lows or the highs, because it shows that people weren't really nervous going into the close. They weren't covering their shorts. People intended on selling further. And based off some back tests that we've done, a stock that closes at the bottom 20 to 25% of its range will generally have a gap down, if not follow through the next day. The follow through is less guaranteed than the gap, but it definitely we've definitely seen a correlation between where the stock closes and where the stock continues the next day.
So we sit around here and think about what are the best trades for you guys to learn when you first start. And how do we teach you guys that? This is one of the trades that is easiest to learn for a new and developing trader. One of the easiest trades to learn as a new and developing traders. One of the most effective trades that you can take as an active trader. And so putting those two things together, you get a setup very much worth your attention, worth your time to learn. Not difficult to understand. Had a big move on day one. Fundamentals are changing in the company. Price action's not showing that the selling is done. Levels from day one, we can all understand. Expectation, follow through, that's a second day trade, right? Elevated Arval on day one, lots of expansion, so good job looking at ATRs here. And as Nano said, you're not going to be able, if you're a big fund, to be able to get out of your position just on day one. It's going to take you some time. So, don't want to underscore my first point. Great trade for you to start with as a new and developing trader. Very powerful trade. What I love here also is the use of technology so you don't miss it. The problem with this trade that I've seen in coaching people at this firm and outside for this particular trade is they miss the best of them. And then when they go and look at their stats for second day trades, guess what? It's incomplete because there's really good ones that they didn't take and they missed because they didn't take the time to actually do what Nano did, which is build technology so they don't miss any of them. And this was, if I'm not mistaken, this was one of your best trades to date, correct?
Yeah, so I mean, it was one of our best trades, in terms of P&L, but this trade came with a lot of regret afterwards because we've hit this trade before and we know what the cost is of getting all out on day one. The cost is you're going to probably miss 40, 50% of the move sometimes. I mean, SVIAC continued so much lower, and while it was a good trade, I can't tell you how much heartbreak we have looking at SVIAC where it is today, because that work that we did to get SVIAC on our screen could have paid us out 5 times more. And I don't think we'll be making that mistake again, I can tell you that. These trades follow through, they have power. It's an easy trade to learn, it's an easy trade to work with. And in the future, I can't imagine hitting out of this trade all on day one. So yeah, but yeah, it was one of our biggest trades. Thanks for bringing that up. Yeah.
Okay, good. All right, what else you got?
All right, so let's go over the higher time frame analysis on this one. As you can see, this stock is pretty beaten down, trading below the 200 daily. It's getting sold overall on the daily. You can kind of see a bit of a covering rally going into earnings. Nothing too serious. Just looks kind of like a bear flag. Probably some retail shorts getting out. So obviously this is a day 2 play. So what I'm showing you here is what the daily looked like the day after earnings. And this was unique. The volume was highest that we've had on SVIAC in years. It was breaking monthly supports that it hadn't broken in years. And it was holding down there, right? So that's crucial. This is a higher time frame technical chart that I would probably never buy. So, it really lined up very well with this trade.
If you want to learn 3 real-world setups that our traders use, including the simple setup that we teach all of our new traders and the setup that turned one of our traders into a 7-figure big money earner, check out the free webinar that we're currently running. Just go ahead and click the link that should be appearing right now at the top right-hand corner of your screen. That's going to open up this free registration page in the new window, so don't worry, you're not going to lose this video. You're going to learn more in a couple of hours from this trading workshop than from years of online education.
A bit more zoomed in here, as you guys can see, we had this gap down below 52-week lows. We had the continuation on day 1, which sometimes is kind of unique for this trade. Sometimes it doesn't even continue on day 1, but rather on day 1 it consolidates on the pre-market low. This one even broke lower through this monthly support, really showing that an institution was hitting out for sure, and then traded at the lows. This is, again, the 30-minute chart. What you're seeing here is these 30-minute candles, as you guys can see, they're getting tighter and tighter and closing lower and lower. I'm not sure what you else could ask for a short. So some overall market context. Now, obviously, this SPY chart looks so incredibly strong. But there was a small shift in dynamic in terms of the tape leading into this trade. It did play a small role in this trade for us. In particular, what we had the day prior was a flash crash in the market, which was, unique. We hadn't had this in a while, and there was definitely some coronavirus fears hitting the tape. The Hammerstone, we're seeing a lot of cases pop up here and there, and the question was in our head, when are we going to get this real case in the United States, and when is this going to hit the United States? And so I think what was happening is again, we were having a shift in the dynamic of the tape, and it was kind of getting a little bit more bearish, and most stocks were not pushing all-time highs. They were kind of getting sold off their all-time highs. Now, regardless, I would take this trade without knowing this. This just fuels me to kind of look for trades that are working to the short side. So, in the morning, me and Armand are deciding, what do you want to do? We want to look for the ideas that are going to be long ideas, and we want to look for ideas that are going to be short ideas, right? So, on this day, we knew that we needed to look for ideas that were going to be good short ideas, and this wasn't just any good short idea. It was also a good short idea with some a changing tape. This mattered a little bit for our conviction for the trade, but regardless of this, we would have taken it. So morning game plan. I will mention this game plan is not much different than any of my game plans for second day RSWs, second day earnings. That work. That look like SVIAC. First thing we like to see is the afternoon resistance get tested to kind of put on a little bit of risk against 2-day VWAP. The reason that we do this is because generally stocks that are going to continue lower are going to get sellers pushing them even lower from the prior day. So, the first day's level where you see the stock kind of turn over towards the afternoon and make another leg lower, that means the sellers step down there. And what we want to see is those sellers get tested and those sellers to step down again. That to us confirms that the sellers are getting more and more aggressive. I call it a spike, right? I don't want to see it push up to afternoon resistance and kind of consolidate under it. That's not good. I want to see it spike into the afternoon resistance and fail back down quickly. We use 2-day VWAP when we have a large gap because it allows us to kind of define the people that were pre-earnings versus post-earnings. We don't use that stop until, of course, unless we have an established high a day. Obviously when you're shorting something and you're not sure where the high a day is going to be just yet as it's pushing up, you don't want to be too tight. You don't want to try to top ticket. That's just not worth your time. You'd rather scale into a small short position against a stop where you think the stock should stay under, such as 2-day VWAP for us, for example, is what works. And so we scale in against 2-day VWAP again at those afternoon resistances. Next thing I want to see is quick fail of that afternoon resistance and momentum to the downside now, right? So, initially some stocks, what they'll do is they'll open up, they'll start grinding lower. Me and Armand sit there and say, nope, that's not it. Because when the stock is going to go down, it's going to have momentum. It's going to get sold. So, when SVIAC, for example, actually, it opened up and it started trading lower. And me and Armand were in a little bit from the pre-market. But what we knew was it needs to establish a high a day. Once the stock establishes a high a day, that's when you can really put on your core position, a position that you can feel like this should not get above this high a day anymore. And that's when you really have the great risk to reward, the big full tier risk against. And then finally, I want to watch for a break and hold below earnings low. Once it puts in a high day and gets back below yesterday's low, which is the earnings low, what I want to see is for it to get below that easily and hold below that. And if it does, then I need to be potentially doubling my size there for a Momo lot. I need to be getting bigger because that indicates to me that the buyer from yesterday that was holding the stock up on that flat bottom is now gone. There's nobody there anymore. It's free air under there. And yeah, I mean, this is last and important thing is to try to hold through irrelevant price action. A lot of times we make the mistake of stopping out because maybe we see a lesser significant swing high get put in. And that's why it's so important to pay attention to where your high of day is. Because if you can just risk off that for your core position, then you kind of play with the momentum trades a little bit, with some price action in there and kind of trade around your trade. That's okay. But you don't want to touch your core.
Yeah, good idea for when you're trading your core to handle your exits with a higher time frame chart. So, lots of times we'll look at 1-2 minute charts. Think about looking at a 15-minute chart and a 30-minute chart for making a determination on you holding your core.
Pre-trade checklist here. We kind of mostly went over this. We want to see elevated RVOL. As we saw in the intraday fundamentals, we were 10 times this. Breakout below earnings low with volume. Quickly get below yesterday's prices. And then know my targets. And I know what I want to see in SVIAC. I want to see it quickly get below and hold below yesterday's low with obvious selling on the tape. Okay, so this is my morning game plan. This is my chart. So as you guys can see, SVIAC. This is what I would consider here R1. This is what I would consider here R2. And the most ideal scenario is that we see a spike into R1 and a quick failure of earnings low. Yeah. So as you guys can see, right, massive move to the downside, big consolidation all day. I mean, whatever buyer that was at 29, whenever he steps out of the way, it's definitely time to be hitting it big. A slide I added that I haven't added to other playbooks that I really like about this one is, and I want to really share this with the SMB guys a lot because it feels like not a lot of people understand that the earlier you get up in the morning and the quicker you get to your desk, and if you have your levels prepared, if you have your stuff ready, then what you're going to catch on to is some clues in the pre-market. Clues in the pre-market that'll get you better prices. Clues in the pre-market that'll get you more conviction on the trade, and that'll put you in a position in the driver's seat towards the open, understanding what the tape is like. What I loved about this pre-market activity in particular is that we had kind of tested this R1, and I know you almost can't tell, but it was a few dashes over here that traded at R1. And that is exactly where R1 was after resistance 1. And then we quickly got below. And then that 8 a.m. candle, boom, right below yesterday's close. So the name just went right on the day on 8 a.m. Now holding back below VWAP in the pre-market. I don't want to give too much weight to the pre-market, but what I do want to say is if there's somebody already selling in the pre-market and nobody's really holding it up, that's a reason to maybe be putting on a little bit of risk there, or at least something to note for yourself, that A, this likely is going to work. I'm going to have more conviction for this trade, and B, I might be able to use these pre-market levels as a place to risk off of for my intraday trade. Okay, so as you can see, the prices that me and Armand got in the pre-market were prices that weren't even seen, on an intraday basis, right? So, we, like I said, we had crashed through yesterday's close price at 8 a.m. On the open, you can see SVIAC started kind of trading lower. Now, what was interesting about this is the way it was happening. The tape wasn't selling. It was kind of slower. And so we were kind of waiting to see if it was going to put in a high day a little bit higher. And then it did. And, this is when you kind of know you have your best trade. It goes to yesterday's close price. It spikes there. Probably scares some people out. But really what's happening is we're getting a spike. We're testing those sellers. And then we immediately fail. And then we come back through open. I mean, that's a powerful pattern to see because, it's clearly showing the sellers are in control. It's showing that you have momentum for your trade and that this stock is likely going to trade lower. When you're putting on, half your daily stop against, on this trade, you want everything, all the little nuances to be right. You want all these nuances to line up. And when we see nuances like this line up, it only makes sense to be hitting it big. You're really hurting yourself by not hitting it big, really. This is the initial breakdown of the tape. What you'll see basically is this 28.8 level. You'll see it break down very quickly. You can see there's a bid there that gets taken out, and then you see some large offers trying to almost chase it down. So you guys can see those bids right there, boom, taken out. Quickly trading below 28.8. Check out those offers on 7/8. Quickly trading back below those prices now. Good tape action. Let's see here. So yeah, I mean, something that I do want to go over with here is that, you know, when I'm adding to my position through this momentum, I'm looking for a place to take off my momentum. You know, I mean, you have to pay yourself for the trade, and in case anything goes wrong, if I can cover my risk for the trade, I will. But my goal is to not touch my core. So, you know, I'm adding a little bit extra size, probably a little more than I even should, in hopes that the momentum continues. And if I see that momentum die off, I'm quickly hitting out of it. You know, I may not have a defined stop necessarily, but my stop is maybe even like a few cents above. I'm expecting this momentum to continue to the downside. I'm not expecting it to even get back above, you know, the last 1 minute high. That type of momentum lot, I want to take it off quickly, pay myself a little bit for the trade. That way I can feel comfortable holding my core position, which is most likely going to get a fat pullback on that will retrace a lot of profits and make me nervous. But ideally, if you pay yourself with the Momo, you put yourself in in the driver's seat in a sense, with your core position. That is really what's going to make you, make up your P&L really.
So let's talk about that. So when you have something that's acting cleanly and you have something that's a setup that you really like, one of your better setups that you've measured, your mindset needs to shift towards, how do I add some risk? Even if adding risk, you do so with tight stops, that's still better. You'll get used to actually having more size in a particular play. And from there you can work on, you know, what are the optimal exits for a position like that. But your mindset's got to be, when you're seeing something acting well, you're sitting in your seat, you're observing, oh wow, this is acting so cleanly. This is acting as if somebody put this in a textbook. This is acting exactly the way that I thought it should be. You should immediately click in your head, how can I put on more risk? Where am I going to put on more risk? What are going to be my stops for me to put on more risk? And when you do a playbook trade like this, the focus for something like this should be, within my system, I would be shorter more here. Here is specifically how I might get those executions. A good thing to do is look for those flash ups. You know, just put some offers up and get in the habit of putting some offers up from the breakdown areas when things are acting cleanly. Nibble, as you said really, really well, take some shots at some of these Momo lots when things are acting really cleanly. That is what you have to do. And so I like the focus of, hey, how am I going to take some more out of this? One more thing on a separate topic, which you brought on, which is a little bit more advanced, but we'll cover it while you're here. If you guys want to turn this trade into a swing trade from day one, then I think that's a good candidate for you guys to put into your joint account, test that out, and see if you can come up with a system for being able to trade that. So maybe it is that you're holding this from day one, or maybe this is you're going to hold it day one overnight into day two based on the price action from day one, and make that into a clearly separate trade. But I like the idea of maybe thinking about that as a joint account option for you guys.
Yeah, us too, and we've definitely been working on getting some positions into the joint account. That way, it's almost it's in a different account with specific exit criteria that we can kind of study on our trade review at the end of the month and figure out, is this working for us? Is this is this helping our P&L? Okay, cool. So what I wanted to go over here is how I kind of identified where to take off my momentum lot. In particular, this is where I took it off over here. It wasn't anything special. It was about one full ATR from high a day. I kind of started seeing it rest. The tape kind of started slowing down, and I could tell that the overextension was coming based off the tape. So I think this could be helpful tape for those of you who are looking to play with some of these Momo lots. So what I want you to watch here is a 28.25 bid that ends up holding. Into the overextension, you can start seeing a lot more people start paying the offer. You're not going to see a ton of green on a normal stock that's going like this, but when it's a full ATR off the highs within 15 minutes, you're going to expect some short covering, which is probably what you're seeing here. So as you can see, once we had exited some into this overextension that I just showed you the tape of, we had this massive pullback over here, and this pullback trades above VWAP even for a bit, right, and consolidates here, and definitely made us nervous, and it probably makes any inexperienced trader a little bit nervous once it gets above VWAP. But here's the thing. The stock is down 20 something percent. You can't expect it to trade so perfectly to the tick and fail VWAP to the tick, right? It's going to need to rest a little bit. It might go a little bit higher first, but the idea of your core position to use a higher time frame swing high to risk off of is to not put yourself in a position where you're stopping out right above VWAP. That's not a logical thing to do when you think this stock has the potential to go to 27.5. My conservative target was even 27.5, and we're only sitting at 28.3.
Well, alternative for you guys to think about, and let me just take a step back. Stock's down a ton. It's SSR, meaning that people have to force shorts. First move to the downside steep. All of those things get you to be thinking of this possibly needs to leak above VWAP before it can refail again. I don't really love the idea of holding things above VWAP. I like the idea perhaps better of taking some stops, maybe not all of them. But then if you see sort of a lower high or a failure just above VWAP or running out of steam above VWAP, to hit it hard and use the top of the leak above VWAP for those shares that you really hit hard.
Yeah, and I think there is definitely some work that we can do there to managing the position a little bit more. I think a big problem before is that me and Armand, we would really are trying to focus on not getting out of this core because it was just costing us so much to get out of our core position. But I think as we get more comfortable with these trades and kind of expect this type of a price action to start panning out where it's going to get above VWAP and consolidate, I mean, there is a chance it was going to break up, and ideally I would have covered closer.
Well, I think what you want to do there is maybe you have a trade decision to get out of at least half, but then when you see it start to slow, not get higher, let's say you were in tier 1 or tier 2. You get out of half, you're watching, you see the slowing, you see the lower high, you see it running out of steam, you see it turn. You can be tier 4 then, hitting it hard, using that as momentum stocks, momentum tiers, trading around your core tiers, using that stop against the high of the leak above VWAP and getting the habit of that. That way, you're staying away from being against the momentum. I do think there's a trade decision when something gets above VWAP in a position to take some off. You don't always have to take it off, but that is a trade decision. You want to keep yourself away from being against the momentum as best you can, because you don't have to. You can re-enter. We're not trying to put on 1 million shares of this particular stock. We're trying to put on a small amount. So you can get out, understand if it slows again, and you start to see a turn, to hit it hard. Get even bigger than you were. That's a better position to be in. That's better trading than, let me just hold it through VWAP, which is a signal that the momentum is now up. Because what happens if it just turns around and goes all the way back up to, its opening price? Then you wipe out all of your gains. But make that decision, take some off, let it soften, let it turn, and then boom, hit it hard. Now you're with the momentum again. When you hit it hard, you're in control of your risk. You're even bigger than you were just sitting through the trade, and you'll make more money that way and be more consistent. Something for you guys to think about.
Yeah, I'm gonna have to take note of that. I think I clearly think you are right. It doesn't seem like the most logical thing to do to hold through a move above VWAP, because yeah, I mean, we were very, very close here to saying this is just not looking so good for us. At one point, this is, and I would have hated to take it off at 28.90 when I could have taken it off at, down at 28.50 when it first popped back above VWAP. So, definitely some work we can do there with kind of prioritizing the process of where you can hit out your core and where you can make sure you're hitting back in. That way we're not finding ourselves in a position where, we're not hitting back in the core for one reason or another. But yeah, that definitely makes sense to me. Here are the trade executions. As you guys can see, we short a little. We were short a little bit in the pre-market. We short a little bit towards the open, and then once we saw that big spike into yesterday's prices and a clear failure through the low, shorted more, take off that momentum lot, and the rest is cake really for the trade. It's too easy, really. I mean, these trades, when they work like this, you expect to get paid.
Now it's your turn. What one trade would you recommend for day traders to learn and take when they begin? Let us know by leaving a comment below right now.